Hey guys, welcome back to another video, and in today's video I'm going to go over an alternate entry type to your regular change of character. So one thing that I do know is that a lot of people do struggle when it comes to change of character, because what you will get with a change of character, let's just say we are bullish, what we're doing is we will be coming up, we get a pullback, we get a take of the high, and then we come down, we get a reaction to demand, and then we get a flip. And what a lot of people do is they get caught up in this certain situation right here. So do they enter off the flip? Do they enter at the extreme? Do they go ahead and put in 0.5% risk on this trade, 0.5 on this trade, and literally just have two positions running? So say if it smashes through this, take a 0.5% loss and hope that it gets tagged in there and then continues. So the entry method that I'm going to show you today eliminates all of the guesswork, because what you will do basically is you will obviously take your GAN box. So you will need this, and you will need these settings. So you will need 0, 0.5 and 1. Go ahead, save yourself a template, just for future use, and once you've got this, you're good to go. So what you're basically doing is you're taking your GAN box and you are putting it on, and then you're waiting for a break of this low, and here is where you can set your order. You set your order around the EQ, and then target wherever you want. So the next demand zone, 5R, 10R, whatever you want. And that's the overall overview of this entry type. So first of all, as you can see on the left hand side, we've got your generic change of character. So what we've seen is, again, come up, come down, take the high, and then we break the low that put in this new high. And this is where you would enter. And like I said before, sometimes there's two entries, like there's a decisional, there's an extreme, and a lot of people get confused which one to enter at. And as you can see on the right hand side, we have got our breakout method. So the breakout method, what you're looking for is if we are coming up bullish, let's say we've got all these bullish candles right here, and then we get a bearish candle, and then we get a break of this bearish candle high, this would then become our range. So you would draw your range from the bottom of the bearish candle to the top of the bullish candle. You would wait for this low to be broken right here, and then you would enter at the EQ. You can obviously go ahead, test this, and you can enter at the 25, the 75, the open, whatever you wish to use. You can go ahead, test it yourself and see what works best. But for me, I would just keep it simple and enter at the EQ. And the overall idea is to enter at the EQ on every single position, no matter what. So you're not swapping and changing where your entry is. It's just consistency along the board. It's super simplified, it's super consistent, and there's no guesswork overall. So what I'll do now is I'll go down onto the charts and just show you some sort of real life examples. So as you can see, I've marked up some zones here. They might not be the best zones, but these zones specifically give good examples of this entry type. So I'll start off on this one right here. So if I just get the replay tool so I don't have to scroll back a million miles. As you can see, we've come down, we've come up, we've tagged into sort of this extreme area right here. And what you can do now is you can drop down onto your entry time frame. So for me, I'm going to drop down onto the 1M, but you can use 2, 3, 4, 5, 15, whatever you want to use. You can pretty much use any time frame. So drop down onto your entry time frame, and then you want to come up, and then as soon as you tap into your your point of interest, this is where you want to identify your range. So what I'll do is I'll just start off from this bearish candle right here. So as you can see, we've got this bearish candle, and then we tap in right here. So what we would have this, and then as you can see, we then get a bearish candle, and then we get a break of this bearish candle high. So what you do then is you then move your range up. So it would go from the top of this bullish candle to the bottom of this bearish one. And then what you would do, as you can see, we get a little pullback here with this bearish candle, and then a break of the high again. So your range would move from here to here, and then that would be obviously the extreme of your range. As you can see then what happens, we get a break to the downside, and here is where you would set your entry. So as you can see, we don't actually get a tap in here, but let's just see if we get a tap in over here. So again, as I said before, the range would be from the bottom of this bearish candle to the top of this bullish one. And as you can see, we do get a perfect tap in to the EQ of the breakout range. So what you can do, stop above the high, 4.5 pips. If you want to, you can leave a bit of breathing room, so 5 pips. and just leave a bit of space above, you know, the high right here. And what you can do then is just target, you know, wherever you want. So you can target 5R, 10R, the next supply and demand zone on an higher time frame, whatever it may be, manage it how you want. Obviously, with this example right here, we do get a breakout and then we don't get a tap in right here, but for me, this entry is still valid. So if you leave this entry on, what you might want to do yourself when you're testing, you might want to go ahead and, you know, remove your order around here, whatever it may be. So some people might not get tagged into this, but for me it's still valid and I probably would still have my order on. But one thing that you do need to note with this type of entry model is that obviously your stop loss is a little bit bigger. Usually when people use, you know, change of character and things like that, people might, you know, enter, you know, someone might enter on like this candle right here and then get like an entry on the 25% and then maybe have like a 3 pip stop. But with this entry model here, you do have to have a little bit of a bigger stop, but it doesn't really affect it that much. You know, if you go ahead, back test this, you will see that the profits are still there. You can still hit high risk to reward trades and things like that. But overall, what this entry model does is it eliminates all of the confusion. As you can see, you know, people might want to enter off here, which would obviously be a logical entry. But the problem is then what would happen is we'd come down and we'd probably get taken out for break even if you entered here. You know, some people might take profit at 5R, whatever. But overall, a lot of people do target a little bit higher than that. So the majority might, you know, get taken out for break even. Whereas with this entry model right here, what you've done is you've been tagged in right at the extreme, and then you've been able to ride price down to, you know, I think this goes for quite a bit. So obviously what you could do is you could take every partials at 5R, 10R, whatever, and just ride price down. But what I'll do now is I'll go out of our replay mode and go on to the next example. So I've just got an example right here. You know, it's coming from a flip zone, and then we tap back in here, and then if I just use a replay mode again, so I don't have to scroll back and go back down onto the 1M. So like I said before, obviously it does work with, you know, any time frame pretty much. You can use 3, 4, 5M, whatever it may be, and just whatever you're comfortable with really. And this entry here, I want to show this specifically because I know there's a nice chalk entry here with a really small stop loss, but you could also enter with this entry model. Obviously you'll have a little bit of a bigger stop loss, but overall the trade still plays out, and as you can see, you know, price action does run on. So we get a tap in here. So where would our range be? So our range would be from this bullish candle to the bottom of this bearish candle. What you will notice now is obviously we got a breakout with a wick, so you need to decide whether you want to see a wick break or a body break. You know, for me personally, I'm happy to see a wick break like I would with a change of character, but some people might want to wait for a body break, and that's absolutely fine, because in this situation here, obviously we've come down, we've had a break of this range. If you are using wick breaks, you have then taken a, you know, a 1% loss, 0.5% loss, whatever you're risking. So we would take a loss right here. But then for me, this demand zone would still be valid. So for me personally, what I've got is a 2 loss per day rule. So obviously if I take 1 loss here, it's still valid for me to take another trade around here. So what I would do is then I would adjust, I would mark out my range. So my new range would be from here to the bottom. So this bullish candle to the bottom of this bearish candle. What we then see is we see a breakout. We see a breakout here. And then obviously you can now set your entry. So the entry would be at the EQ. Cover the low. So this would be an 8.1 pip stop loss. You could, you know, do 8.6, whatever you want. So just giving the trade a little bit of breathing room, because, you know, sometimes price can come back down and, you know, just mess around a little bit before going. And the whole point of this entry model is, you know, to not be swept out of your position and then the price move in that given direction, because what you'll see a lot of time with chalk is if you're entering off the flip, for example, you might end up getting swept. Price then might tap into the extreme and then go, and obviously your overall analysis and stuff would be correct, but you've just entered in the wrong position. So this is what that eliminates. Obviously the stop loss is a little bit bigger, but, you know, overall if you're happy with that, then it is what it is. So a little bit of a bigger stop loss, and then you can go ahead and target, you know, wherever you want. So that's just a nice example. We would take a loss here, but this demand zone would still be valid, and then we get involved in the second trade, and then price, you know, goes and runs. So I've got one more example just to show you really quickly. So back out of the replay mode, and let's have a look. So it would be right here, replay, and then drop down onto your entry time frame. So as you can see, we are on our entry time frame here. This one's a little bit weird, to be fair. You might not want to trade this trade because obviously there's news, and you might get taken out, and it's probably not the wisest decision, but I'll show you it anyway. So we get a tap in here, and then our range would be from this bullish candle to the bottom of this bearish candle. We then get a breakout, and then we can enter off the EQ. And I want to show you this one because the stop loss on this one is really small. So a 3 pip stop, like I said, you can cover the high, so 3.5 pip stop loss, cover the high, give your trade a little bit of a breathing room, and you could target wherever you want. So this trade here would hit 10R pretty fast and pretty comfortably. What you'll see then is we come up, we come back down, and then if you wanted to, you could get involved, probably around here somewhere if we just have a look at it. What we've done then is we've come down, we swept these lows. And where would our range be after tapping in? So as you can see, we've got a tap in. Our range would start from this bullish candle down to this bearish candle, but what you've seen then is we've got a bullish candle, and then that bullish candle low has been broken by this next bearish candle. So what you would do then is you would move your range over, and then this would become our range. Then you can go ahead, put your entry on the EQ, stop below the low, again 3.9, so you could have a 4.5 pip stop loss or something like that. So 4.5 pip stop loss, and then you can go ahead and target wherever you want. And as you can see, this trade runs on for quite a while. A really simple entry model, and there's no confusion around where you're going to enter. What you're not doing is you're not looking for the change of character, and you're not guessing whether you enter on the extreme, whether you enter on the flip, whatever. So it's always the same process. You enter at the same point on every single trade. So what I would do is I will go into your charts, give this a little back test. If it works for you, you can add it to your trade plan. And if it's a little bit better than change of character, and it helps you avoid getting swept out of positions before price then moves in your direction, it's going to be a game changer to your trading, and it's just a simplistic way in order to enter the market. So yeah, if this video did help you out, guys, if it did provide you any value, please drop a like on today's video, and as always, if you have any questions, feel free to drop them in the comment section down below. And without further ado, guys, thank you very much for watching, and I will see you in the next one.